Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we again will return to discussion of euro currency. Just in the beginning of the video I will show you our yesterday setup with the New Zealand dollar. It was completed just perfect, so no surprises were brought by the Kiwi. So as you can see, that's our setup. Yesterday drop precisely to the trade support and upward action. So market even now has exceeded the target. So minimum target was around, as we said, 618 resistance of this whole back action. So now it was exceeded and markets continue to move higher. So this tactical step on the New Zealand dollar has been confirmed and completed. Right now we're returning back to discussion of the euro currency. So the euro currency is a bit longer journey that we have. So because market's moving very slowly. Currently, in the beginning of the week, it finally has reached the specified level that we have discussed in the weekly research, and we said that's probably an area where a market could try to take some upward retracement, because this area indeed is really strong support. So we see this confidence support. It's 111.24, 111.90 area. It also includes yearly pivot point. It already has been tested. First support moving up, drop again to the downside, and take a look. This is 127 extension of this most recent swing up. So this is probably not the butterfly, not some agreement, but still this is the area that provides additional support to the market. And we said, well, probably it seems that this level of our market could try to take the upward retracement. Why this should happen? Because in most cases, guys, almost every time when the market forms reversal swing, it usually forms after that some kind of the ABCD retracement. That's why here we said that probably we should be ready for that, and maybe market will take this retracement. Of course, I understand that today we will get important numbers and non-farm payrolls. Maybe it's not a really good idea trying to anticipate or forecast some upward action, but we will take a look just on the technical picture, and later you will decide would you like to trade it or maybe not. Anyway, we will discuss this current situation that we have, and the major concern was for us is the pattern. So we, on the beginning of the week, we have taken one look once at the euro currency. Well, no pattern. Let's talk on some other currency, and again after two sessions we have taken a look again. No pattern. So probably we should wait a bit more, and so on. Right now, guys, the pattern could be easily recognizable, although it hasn't been completed totally. So I will show you on the 4-hour time frame chart. As you can see, we could get some kind of the hand shoulders pattern. So take a look. First of all, we have nicely looking bullish divergence that given a hint on the possible upward action. Also, take a look at this action. So that could become left shoulder, head. Right now, market is forming the right shoulder, and it stands in most important level. Why this level is most important? Because this is the bottom of the right shoulder. Here, market either will turn up or it will move down. It will lead to failure of this pattern, and it will mean that market will drop below these lows. That's why it's a very important area. Also, take a look how market behaves here. It has started from the testing weekly pivot point, breaking to the upside, reaching the yearly pivot resistance one, and dropping right back down. So right now it's calling inside of the weekly pivot point. It's forming this potential pattern that could become the triggering pattern, the foundation for a possible upward action. So if we will get ABCD retracement, we probably will get two targets. The first target is 125.29. 50 approximately 40. This will be the AB equals CD target of the hand shoulders. If market will move to the ultimate target, with the ultimate, I mean 1618 extension on the same ABCD, or if you will measure the distance from the bottom of the head to the neckline, count it to the upside, you will get the same area. It approximately stands at 113.30. This will be the 50% resistance of the whole downward action. 50%, guys, is the favorable level for EUR currency. So maybe if this upward action will start, maybe market will reach this area. But currently, guys, it's still unclear whether this pattern will be completed and whether the market will turn to the upside. Currently, it seems that it could happen. So if you will take a look at the 30-minute chart, very rare takes a look at this time frame, but it's necessary right now since we're trying to get the clarity, understanding what really is going on inside of this bottom of this shoulder, where the market has an ability to turn to the upside. So if you'll take a look at the 30-minute chart, you'll see that this is possible. So right at the bottom of the right shoulder, market has formed a butterfly, and now it forms something that reminds the hand shoulders as well. Here is forming the bullish grabber. So you can see this long shadows to the downside tells about the support. That's as soon as market dropping slightly lower, investors trying to buy it back. So you can see this indicates the support, and maybe this particular construction could lead market to the starting of the upward action. So that's why this is the point where you probably will have to make the decision: would you like to take long position here or not? Because we do not know how the situation will develop to the upside. What will happen on this way? Maybe it will be difficult to take the position on the long side of the market later. From the other point of view, if market will drop here, you will not need to take the long position anymore. That's why here, as I usually call it, is the culmination point. So it means that market stands in an area where that is the red line, the crucial area for a bullish scenario. If market will drop below it, the bullish scenario will be destroyed, and hardly we will get any ABCD action to the upside. That's why in the culmination points, you usually have the ability to get the maximum risk-reward ratio. So it means that here you will be able to place very tight stop, and you will get the best entry point. But you, in this case, takes a bit more risk, since market currently it is unclear whether market will start upward action or not. Here you do not have the signs of it. So that's some sort of the not quite blindly action, not quite blindly position, but just more risk. You have the patterns in place, you have the context for trading, but you do not have the market on your side yet. So when the market will start move up, you will get it, but your entry point will be in a worse place, and your risk reward will decrease significantly. That's why here is a bit balance that you should take. So either you take the position here with the best point, but you have the more risk and uncertainty about the further upward action, whether it will happen or not, or you will try to take position here, but you get the worst numbers of the risk reward and worse entry point. So that's it's a bit a question that you will have to ask. That's only for those of you who trade on the intraday charts, who make the scalp trading, and who has intention trying to take this position based on these hand shoulder specials. For others, guys, for those of you who are searching for taking the short, take a look that market could retest this area, because this trend line stands precisely at 1345, and that stands in agreement with this target. It's very close. For the daily trading, as we have discussed in our weekly research, we're mostly will be searching for taking the short position, because on the EUR currency, on the higher time frame, especially on the weekly and the monthly chart, we have the reversal candles that tells about further drop. So this situation right now is mostly very short term. That probably will come to an end today and maybe on Monday. So that's very short term trading, only for those of you who trade on intraday charts. If you trade on the daily chart, you need just to wait when this retracement will happen to get better entry point on the short side of the market. So logic is simple, as you can see. That being said, let's see what we will get on the farm payrolls release, how it will shake the markets, and how it will impact on this short-term setup. By the way, maybe it will be completed right to the release, since if market will start taking profit on the short position that have been opened previously, taking the profit and closing some shorts, so maybe market will reach this target even faster. I do not know. So let's see what will happen.